What's up, everybody? It's Coach D, and today I'm going to give you guys a GBP JPY analysis on for the week of the fourth week of January 26th through the 31st, and we're going to start off with the monthly. Let's take a look at what's going on with the monthly. So far, we have a bearish hanging man candle. That's a bearish hanging man candle forming, which means that it went up to about as high as 180 or 194,828, and it decided to, by the end of Friday's session, it started retracing. So it pretty much rejected that 194,775 high. Pretty much, I'm saying, yeah, the 194,775, that was Friday's daily high. So it rejected that area and started coming back down, and that created that bearish hanging man candle. So pretty much want to continue to look for sales because of that. It rejected that area, so it can continue to come back down. So just be very mindful that the monthly is very important to watch. And now let's go to the weekly. In the weekly, we have a bullish engulfed candle. And let me show you how that looked. So we go to the weekly. That's a bullish engulfed candle that was created. Continue to look for sales until it breaks the 194,775. We're looking for buys above 194,775. And I will say anything, I'll get to the lows later, but weekly so far we're very bullish. That means we can continue going up, and we might have just some retracement going on, but we're not for sure. We gotta watch. That's when we get down to the go down to the lower time frames to see what's really going on. So what I wrote was we have a bullish engulfed candle rejecting at 194,775. Continue to look for sales unless it breaks from and form new support at 194,775. That's exactly what you want to do. So let's look at the daily. See what the daily is we got going on. As you see last week, Monday, Tuesday, Wednesday was bearish. We had a Dogi candle form. That's pretty much was still a bullish day also, even though it looked like it's a red, that little cross it looked like. That's a Doji candle, and it continued to go up. So we had a bullish week all week for week 3 in January. So the 193 broke resistance and went up to 194,775. So that was very bullish for Friday. Friday was the most aggressive day throughout the week. So now we still want to continue to look for that bullish momentum. Anything over 194,775. Let's look at what I wrote for the daily. Each day we had a bullish daily candle last week. Our goal was to reach 193 area, and if it reject, to go for sale. It broke through 193 and went up to 174 pips bullish momentum. Look for buys above 194,775. I can't stress that enough. 194,775, we look for buys. So let's go to the 4-hour. See what's going on there. The 4-hour, we had, if you look at all them 4-hour candles, each candle you see represent 4 hours, and it was in a range most of the month. It stayed in a range. That was if you could get some pips out of that, which I did, that's kind of crazy. That tight range it was, but I was able to make a lot of pips, even with that little range. So, but as you see, it broke out that range and it continued up. Now, you had a rejection at the 194,775, and it's forming a doji candle, which could mean it can reverse and go back down and go all the way back down to the 192,060. So just be mindful of that next week. Even though I'm looking for buys, it can go either way. We never know. That's why when we get to the hour, we look for the break of the range that we're currently in. And once it go bearish or bullish, we go to that direction. It's that simple. That's how simple it can be. You just want to go the direction, it breaks the range. That's what I teach my students, and we're doing real good off of it. So for the 4 hour, the range broke. We have bullish momentum. Look for buys at 194.775. We got a doji candle forming, which means it could that could be a means for a reversal for sales. 1 hour. This is where we take our entries. This is what we look at to take our entries, and we don't trade unless it go out of that range. That burgundy area is the range. You see each candle represent 1 hour. So anything above 194.775, buy. Anything below 193.7 or 193.915, sell. It's that simple. That's going to be week 4. So let's get to the nitty gritty of our game plan. If we take a trade at the break of Friday's daily high at 194.775, we have over 410 pips in play. The next major resistance will be 198.925. So that's what we got right there. 410 pips in play. That can be some very good pips for anyone who take buys above that 194.775. If we break below the 1 hour support at 193.915, we have 188 pips in play. The goal is to always get your 20 pips. Then set your stop loss. Let me fix that. Then set your stop loss accordingly to take more profit. Now, that is the game plan. It can go either way. Get your pips daily, 20 pips in dip. Always watch what's going on throughout the week. I'll be marking up our daily charts. And now you have a perspective on what's going to go on for the week. My name is Coach D. I'm out.